AP, New York, in 2017, the proportion of Americans without a bank account reached a historic low as more people joined the traditional financial system as a result of the growth of online-only banks and an improving economy. According to a new Federal Deposit Insurance Corporation analysis released on Tuesday, May 9, million homes, or 4.5% of Americans, would not have a bank account by the year 2021. It has decreased from 5.4% of Americans in the 2019 survey data to the lowest percentage since the FDIC began keeping track of the data in 2009. FDIC Acting Chairman Martin J. Gruenberg stated in a statement that during the epidemic, people opened bank accounts to obtain relief cash and other advantages quickly and securely. However, the FDIC claimed that the improved economy in 2021, when the coronavirus pandemic limitations essentially ended and unemployment was low, was largely responsible for the improvement. Despite improvements, Black and Hispanic households continue to be far more likely than other households to lack a bank account. Approximately 11.3% of Black households do not have a bank account, which is a decrease from 13.8% from 2 years ago. In families with Hispanic residents, that percentage dropped from 12.2% to 9.3%. In 2009, the FDIC began monitoring unbanked Americans. As a result of the Great Recession, more Americans were unbanked in 2011, according to the data. Americans maintained their bank accounts throughout the coronavirus recession, but if inflation continues to harm the economy and unemployment rises, it's possible that the number of unbanked Americans will climb. Bank trust and privacy issues affected other households. Banks are also making use of the consumer data that is being collected by major corporations like Amazon through credit card usage. Among the unbanked are recent arrivals and refugees. Joma Acharya, a case manager with Community Refugee and Immigration Services in Columbus and a former refugee from Bhutan, said he has noticed an uptick in the number of clients phoning him to complain about establishments that won't accept their currency. According to Acharya, I have never worked with a single, new, refugee who said they have ever used a credit card in their life. According to Acharya, it typically takes customers at least 5 months to establish sufficient credit with American banks to open an account. Meanwhile, according to Acharya, they work to instruct customers on how to utilize their electronic benefits transfer card and progress to a debit card. Before the COVID-19 epidemic, certain states and localities, including New Jersey, Massachusetts, San Francisco, and Philadelphia, required that cash be accepted. But since the epidemic started, at least 7 states have approved similar legislation, largely in response to the growing number of contactless businesses who are adhering to the CDC's instructions to restrict the use of cash out of concern for the virus's spread. According to information from the National Conference of State Legislatures, legislation requiring that companies accept cash was approved in Delaware, New York, Oregon, Arizona, Colorado, Connecticut, and Rhode Island. Since 2020, cash mandate legislation has been proposed in more than a dozen states. At least 3 bills in Florida, Mississippi, and North Dakota, states with majorities of Republicans, 2 bills in New Hampshire and Wisconsin, states with majorities of Democrats. The Ohio legislature is still considering the bill at this time. Every Democrat in the state, according to Blessing, would support the plan if it were put to a vote, despite opposition from his Republican colleagues in the Republican-controlled state. In addition, the poll discovered a reduction in the proportion of so-called underbanked families, or those who have a bank account but nevertheless use pricey financial services like check cashing, pawn shops, payday loans, and remittances. In addition, the FDIC discovered that in 2021, about half of all American households used non-bank payment services like Cash App, Venmo, or PayPal. _________SAP Samantha Hendrickson, an Ohio State House reporter, contributed to this article from Columbus, Ohio.